What is short selling? That's what we're going to answer in today's video. Hello everyone, it's nice to have you here. I'm Josh. In today's episode of our series of explainer videos, How the Platform Works, we will speak about short selling. But before we start, we'd like to thank you for our interest in our recently published videos. Please don't hesitate to leave your comments below the videos we post. Ask your questions, share your trading experience with us, and provide your suggestions on how we might improve our product and service. We do appreciate your feedback and are always happy to hear from you. Okay, let's dive in. Have you ever thought about falling markets, high volatility, a negative outlook, or even a crisis as an opportunity? Perceived as unfavorable market conditions by many investors, for some traders, the described conditions may be considered as new opportunities. How? Through short selling. But what does it mean? How does short selling work? Before we explore this term, let's recall some basic characteristics of CFD trading, since short selling is an integral part of CFD trading. If you're relatively new to CFDs, which is contracts for difference, you can watch our very detailed video on the topic and learn more about this type of trading. Briefly speaking, CFDs allow traders to buy or sell assets without actually owning them. In CFD trading, traders may speculate on the occurred price difference. So how does it work? When trading CFDs, you speculate on where the price of the selected asset will move, whether it will increase or decrease in relation to the opening price. If your speculation is correct, when the trade is closed out, you will receive the relevant outcome. The bigger the difference between the opening and closing prices of your trade, the bigger the outcome. If your forecast turns out to be wrong, you will incur a loss. The bigger the difference between the opening and the closing prices of your trade, the bigger the loss. Usually, traders buy assets at a lower price with the intention to sell them later at a higher price and make a profit on the occurred price difference. If traders expect the price of an asset to increase in the future, they open buy positions, or in other words, enter long positions. However, if a trader is of the belief that the price of the chosen asset will decrease in the future, they tend to enter short positions. Short selling implies selling an asset without actually owning it. And here's how that works. Let's say I believe the stock price of company A, which currently costs $10 per share, will decrease in value in the future. So I will open a short position, investing $200 in the said stock price. In this case, I will be selling 20 shares of company A. In traditional short selling, the complete cycle of such an operation will look like this. First, I need to borrow 20 shares from my broker. Then I will immediately sell the borrowed shares at $200. When the stock price of company A starts decreasing and reaches, let's say, $8 per share, I will repurchase the borrowed 20 shares from the broker at $8, paying $160. After doing this, I will return the borrowed shares to the broker and keep the difference, which in my example totals $40. Of course, when you trade on a platform like iqoption or any other, you don't literally make all of these steps. This is only an approximate description of the traditional short selling mechanism. So, how to open a short position on the iqoption platform? The process is really not complicated. First, you need to choose an asset that you would like to trade. On the iqoption platform, you may apply short selling to various assets, not only stocks. For example, you can short sell currency pairs, cryptocurrencies, commodities, indices, or ETFs via CFDs. Click on the plus sign in the upper panel to choose an asset category and then select the asset you would like to trade. Enter the amount you're going to invest by clicking the Amount button. Check the multiplier value applied to your trade. The multiplier, or leverage, allows you to trade positions larger than the amount of capital you invest. This mechanism allows traders to use extra funds from the broker in order to increase the size of their trades. For example, 1 to 2 leverage means that a trader who has invested $100 will be actually trading with $200. Although leverage lets traders increase their trade size and consequently potential gains, it also magnifies their potential losses, putting their capital at higher risk. So you should use leverage with caution. You can also set auto-close parameters for your trade to manage potential risks. The auto-close feature includes stop-loss and take-profit orders. You may either use the default parameters, 50% for stop-loss and 50% for take-profit, or set these parameters according to your own preferences. Press sell to enter a short position, and voila! Now you should only wait for the result. And if your speculation is correct, you will get a positive outcome. So, to sum it up, we can say that even downtrends and bearish markets may create potential opportunities for traders. These opportunities may be realized through short selling. Some traders also practice opening both long and short positions with the same asset as a way to manage risks. Okay, so this is all I wanted to tell you about short selling. I hope that you've learned how it works and found some useful information in this video. If you believe the video is helpful, then please like and share it. And also subscribe to our channel, hit that bell to get notifications about our upcoming videos. Oh, and one more thing. In that video description below, you will find a link that provides you with immediate access to a free demo account on iqoption. The demo account is credited with $10,000 in virtual funds and allows you to explore the iqoption platform, practice your trading skills, and enhance your trading approach before you decide to invest real funds. Thank you so much for watching. I'll see you next time. Bye.